Good morning and happy Tuesday. Glad to see everybody back to the Bubba Show. So today, I really want to talk about Friday's jobs number and what it really means. You know, as we look back and we hear of the jobs and the way that it's presented to us, the traders, investors, the public, it's really presented in a very poor fashion. You know, last month we showed a job increase of 88,000 new jobs, which was way below what the street expectation was. The street expectation was for 215,000. Now, I said that I thought it would be much less than that, and I actually said on Friday on CNBC that I expected to be sub 130. You know, how did I know that? What made me aware that the jobs number was going to be lower? And I'm going to tell you very simply. It was following the footprints of certain markets. If you take a look at the bond markets were indicating that the market was anticipating a bad jobs number. Now, they're not always right, which we know. But what does it all mean? It means that the economy is not improving. What it means is that companies are not hiring back. What it means is that in 2007, there were 7 million unemployed people. What it means is that in 2015, there's 14 million unemployed people. So you can listen to how the politicians and the Fed wants to spin how good these numbers are. These numbers are brutal. And how many people do you know that aren't working? And I think what you want to take from this is that, you know, the market technically itself is still ignoring a little bit of the jobs number and still going higher. Why? Because the Fed's monetary policy. You see how they tied the policy to the jobs number? So what the 1% of people believe that's happening is that the Fed is going to continue with their easy flow of cash because the jobs number was so bad. So for that 1% of the Warren Buffetts of the world, Bill Gates, all the big corporations, their words are, well, they're going to keep infusing free money. But you have to understand that free money never ends up well, okay? This is not a recipe for success. They are destroying the average corporation, the average Joe, and the average American because they are forcing more pressure on what we have to do. Now, we all know people that aren't working. We all know people that have given up. So the jobs number, although the markets did not sell off drastically yet, were a disaster. And if we had another like this is a sign, this is a big flashing warning sign to you, the investor trader, that you want to look at charts. This is where you want to pick on the weak stocks or the weak indexes. We don't want to sell the ones that are real strong. We want to sell into markets that are making lower highs. That's where our focus has to be. When you're reading a chart, you want to sell weak, you want to sell strength within a weak chart, and you want to buy weakness within a strong chart. But the jobs, bad number, watch the jobless claims. Now all of a sudden the jobless claims could become important again. For months we said it wasn't important. Well, now we're going to have to start watching because it's going to tip off what next month's job is going to be. It's important to understand just how it's going to affect markets. But you can take it from me, if you look at the real true raw data from the Bureau of Labor Statistics, you will see that these numbers are big misses and bigger than even they're letting on to. So, but for Tuesday, remember, Average Joe Options call. You want to check it out? Reach out to me at todd@averagejoeoptions.com. For Tuesday, have a great day. The Bubba Show. We'll talk to you on Wednesday.